Hello, everyone. Welcome back to the RationalInvestor.com's daily brief recap. It's the first day of a 2-day Fed meeting kind of idea right now. I actually kind of think the market's in a bit of a vacuum, a little bit dangerous right now. Make any grand assumptions ahead of JP's big sort of speech, which what I'm finding, it used to be the old rule: don't trust the market for a full hour till after the Fed announcement. But now, since they talk for about an hour, um, it's just don't trust the market until after he's done talking, or she, as the case may be. Anyway, point is that we're in a bit of a vacuum environment right now. I think there's a lot of position squaring. I do see a lot of the tech stocks are getting hit pretty hard here. A little bit of maybe buy the rumor, sell the news, maybe on some of these earnings. I don't know whether the numbers are disappointing outright, but you can see, they're taking it. They're taking these tech stocks to the woodshed, and of course, Mr. Wonderful. Probably on the fact that now, on a relative basis, if Bitcoin is weaker in price, its asset performance is weaker. I don't know. Who knows? But 963 million shares, way too much stock I'd be interested in, trading at 105 times forward earnings, which is extremely expensive, trading at 27 and a half times book value. The book value of the stock right now is $23.95. There it is, 630 bucks a share. Probably a good anecdote of this market state. And it's interesting because I might make the argument that this is almost like an end result of a very, very, very long process. A process actually that I think is unwinding. I might make the argument that a lot of this kind of, especially he even moved over a lot of his manufacturing over to China. And I don't know whether you're seeing, but gee whiz, they're taking China to the woodshed here. So, I've talked a lot about how, if we just pull up the really simple, just sort of indexes, I've talked lots to you guys here about how this is not a free market economy. And you might argue that the totalitarian dictators, they put up with this enough until it really wasn't in their best interest anymore to support it. I don't know whether it's really in their best interest to support this whole economic expansion kind of idea story. You might find, especially with the way Jack Ma went. Oh boy, I mean, holy moly, being a capitalist in CCP China could be very dangerous to your health. So they are taking the Chinese market down hard here. And is this a function of, the market has finally sort of, kind of said, look, we gave you enough sort of leeway, but whether it be South China Seas, whether it be Muslim stuff, whether it be, threats to Japan, etc., it feels as though this market's rolled over. And also, too, now, I get the impression that the leadership is not so friendly to the West and to capitalists anymore. In fact, I suppose one might argue that an M below this trend line is a sell signal. So, where's an M? Oh boy, bang, right there. So, isn't it interesting, right? So, it'd be interesting. What's that date? That date is basically, what is that? It's actually pretty recent here. Right? It's just the beginning of July that this pretty big sell signal just came in here. And how ironic, right? Because I was actually bullish of the Russian ruble lately. Maybe what happens is now the whole American capitalist system shifts to being in love with Putin and propping their economy up for growth and abandons China. Who knows? Crazy. Anyway, put it all together. I was a bit surprised to see this. I mean, there's some serious problems here in China. And make no mistake about it, is that CCP is not a business friendly political party. They are a mafioso. And the mafioso, they don't care where the hell the money comes from. You got to kill somebody to get the money? Fine, kill them. All right. Part of they gotta, are you a producer? I mean, everybody knows how the mafioso works, right? So, oh boy, it's gonna get really dangerous over the next few years, folks. I did, like it's weird how we've been sort of musing about how we're kind of, especially on something like the S&P 500. There's actually this really cool example. We have one gentleman on the website who just he really embraced the idea of the megaphone, and then the question is, where the hell do I have that chart? Yeah, I guess here. Megaphones, head and shoulders tops and stuff, and he's getting really, really good at his craft. If we're really lucky, fingers crossed, he will actually have like an actual vetted course that he's going to teach on the site. So fingers crossed. Hopefully that comes to fruition, because it's such a great concept that he's got down really well. In fact, we joke about it, Adams and Eves and Adams and Steves and all that. I'm trying to show you. Yeah, I guess I don't have it here. Anyway, I did for our day trader room, was kicking around. Well, I don't know what the hell I've done with it though. Oh, here we are. This is a fascinating megaphone line here. Check this out. So this is this megaphone I just showed you, like on the SPY, that kind of thing. Boom, boom, boom. Look at that, eh? I mean, ridiculous. So would a professional trader be hunting up in here for shorts? And look at this. This is ridiculous. So there is that megaphone line. Boom, boom. Interesting. Look at that head and shoulders top that developed off of this tag. Oh, what a trade. Holy free holies. Right down to the bottom. That's where we're drawing this megaphone off of. So then you sort of fast forward in time, and here we are again, back up to it. And look how the market played off of it again. I mean, look at that top. And then, whoosh, down we go. And then, lo and behold, look where we are again. And look at this. I mean, God, look at this precision off of this line. This is ridiculous. So right up, look at that beautiful little top, almost like a head fake. No, not quite ready. Back up, look at the battle right at the line again, then back to the line, then lost the line, then tried to recapture it. And now we've just puked out the other side. So put it all together. Oh, Jesus. I mean, I don't know how bad that Chinese picture gets. I mean, that might get pretty bad. And let's face it. I mean, to be perfectly honest with you, Winnie doesn't need the West anymore, I don't think. So if he wants to go balls to the walls over something like Taiwan, now is a good time for him to do it. Also, too, of course, we got the latest round of this sickness. I suppose that could definitely be in the cards here. I guess put it all together. Oh boy, this is a dangerous, dangerous environment. Did I mention dangerous? Dangerous. I've also said too, and this is what really concerns me about an image like this, is that I've said that the democratically elected politicians down in the United States hegemony of the world, so everybody's basically riding their coattails. If the United States of America falls apart here, my hunch is our whole Western civilization probably will fall apart, probably like the end of the Roman age, that kind of stuff. Pretty audacious statement, I know. But if you think about it, everything is all so entwined. It would take a very long time to recover from this. So there's a lot on the line, and the bankers, of course, completely driving the bus. I think they're very comfortable with supporting this market. They're more than happy to carry the debt. But the deal is that the currency is going to be diluted. Add a zero onto the end of all your price tags. Uh, if you do that, then the bankers will be more than happy to keep financing these deficits, keep financing the overspending, and just the game goes on. More and more U.S. government debt, federal government debt. Um, so with that in mind, the U.S. politicians right now are kind of like, well, I'm hearing a lot from my constituents that there's a bit of inflation and that us keep printing all of these bonds and more deficit, that's just going to produce higher prices and wages aren't going up. So no, maybe we're not going to do this. So now the banksters are going to be okay. Well, you're a democratically elected politician. You have to do what your constituents say. So we are going to now make it very challenging for your constituents, i.e., stock market could crash, quote unquote crash, when in reality they really didn't have any business taking the market up like this. This is just too far, too fast. This is irresponsible economics. Irresponsible. And it usually translates into this. So get ready, folks. I mean, this has got problems written all over it. If we're lucky, this just resolves as just a nice, healthy, simple 52-week range reload zone, 50% tag, unwinding of this megaphone. If we're really unlucky and all hell fucking breaks loose, this could get pretty damn ugly, folks. So just be forewarned. I suppose, if this does, the wheels do ultimately fall off the bus and capitalism is in serious question, blah, 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 blah. Maybe that's how Willy Woo gets his $200,000-$300,000 Bitcoin. Could be. Is China really ready, willing, and able to go to the wall? I think that Korea, they have recently sort of, reestablished their friendship. And I think China could use Korea, as a proxy to really turn up the temperature here. I don't think a lot of people are expecting that. So you might even find that Korea is the distraction, but Taiwan's really the goal. And it becomes sort of like this bait and switch. And Japan's kind of caught off guard because they have to watch both sides. God, what a mess. It's going to be a challenging few years ahead of us, folks. That's for sure. So, there's your backdrop. Are we telling, we had a professional presentation by Daniele, our day trading futures instructors on the site, and they were very cautionary. And if anything, what they were saying was, Daniele in particular, Karan's on summer vacation. He's like, fuck it, I'm not trading this crazy summer market. It's a waste of time. And frankly speaking, I don't blame him. The setups are kind of splotchy at best. But Daniele is kind of like, there's a lot of trending signals here that are saying risk. You better cool your jets. Not so much in the stock market itself yet, but definitely in things, and it's interesting, right? You guys are not going to like me saying this, but I have to say, I was actually impressed by Daniele's forthrightness. Is that such a word? Because I like to follow. Actually, I don't even know if I have it here, but if I go, what I want to do is I want to go. Let's try and make this as simple as possible. And for whatever it's worth, there's not a hell of a lot going on in the market, so there's really not a lot for me to talk ahead of the Fed. So that's why this is sort of half ranty here today, because I don't think it's a good idea to hunt a lot of new setups ahead of the Fed here. So what I wanted to do, but I can't remember. Oh, I've saved this. Here we are. I guess it's this. Put away all this other stuff. It's probably the easiest way for me to do this. Okay. Daniele saw this and I was like, ooh, that's nice. And it's so simple, and yet it's so simple that a lot of people just like completely disregard it. But it's just a really simple moving average system that I developed a million years ago. There we go. So, and I like to use it on the weekly charts. It's a nice simple trending indicator. So, ironically enough, this stock market has actually been trending higher for a very long period of time. It's kind of ironic, eh? Are we due maybe for a little bit of a correction? You can see how long this one was, and this one was a very long expansion, right? And I think this is, you remember before Mr. Well, I guess it was through the whole thing. They kept talking about how this was the longest economic expansion in U.S. market history. But anyway, point here is it's looking a little dangerous, but that's not really the market I wanted to show you. This is the market I wanted to show you, and you're not going to like this, but hey, let's call a spade here. BTC USD. Like I don't like stamp. Boom. Ouch. So I started thinking that 2013, 2014. If that was the case, you notice in this period we did hold on to the bull. But you can clearly see we got a bit of a problem here. Right? We've definitely crossed bearishly here. And also, too, something that jumped out at me while Daniele was talking. He runs the market structure program. And frankly speaking, it's the way you're supposed to trade. But in essence, when you break market structure, so we'll call this like, I'll make that one red. So there's your bearish structure, boom. Then really, to change that thinking, you have to see the structure that actually broke. It should be right there. It needs to be broken. So ironically enough, and not ironic, but it's just the way that it is. This is still structurally pointing down. And it actually has to break that level in earnest. 41,341 and a half, roughly. For that bearish structure, and really you'd like to see the market close right up here, nice and big and green and strong. So it was interesting to see that rally petered out at 45.8130. That's not good. And then notice too, you notice how the moving average acted as support in here and then was lost. So you can see how the moving average acted as resistance in here. It looks like it's doing its job admirably. This kind of reminds me of, we've been through these before. So there was like this one. If anything, what we should expect is now like a nice moving average sandwich. I mean, usually that's how these things resolve. But you can see like this last one. Look at when like I'm a bull to I'm a bear to I'm a bull. No, I'm not. I'm still a bear. Oh, now I'm a bull. And of course, W's, market structure, away we go. I'm a bull. So the fact that it's flipped over to bearish here means we all gotta just sort of take a pause. There is no rip-roaring bull market here. This is gonna take time to clean up, no doubt about it. It sucks. And really, we still actually have to be thinking down until this level is taken out. I'm a little disappointed, like I said, that they couldn't take that level up. And then, you might argue that 30 SMA now is going to be significant resistance on the upside. So, I mean, even if we do take this out, maybe it just translates into something like a head and shoulders pattern at best. So, if anything, maybe we can get something like that. So we head back on the bull. So, it's going to take some time to clean this mess up. And this is a positive scenario. I'm not assuming we had any lower at all. And I thought it was interesting that Daniele sort of said, well, and we've talked about this lots. There's someone out here that makes money a lot in trading, and he has not been properly addressed, and he needs to be properly addressed. He is the Mountain Man, 61.8. And if I'm not mistaken, I think we had a very similar situation previously, and it was like I can't remember where the hell it was. I think it was this move here. And we had this market sort of hover above this mountain man level. I'm not sure if this is the right one. Yeah. And this is what I'm a little bit worried about. Notice they're gonna go down, tag mountain. Everybody's gonna be like, okay, that's it, it's new bull market, and then rip it straight up. And then an inside bar reversal back down because we never did break previous market structure. Maybe that's what's going to happen here. It's a little bit dangerous. It's obviously early. This is still, what is it? It's Tuesday. Is it Monday? Tuesday. Tuesday. So, I mean, let's not put the cart before the horse, but a little disappointed that the rally did stall out below that high. And now we're actually even below that moving average. Boo, it says boo. And if you drill down to like an hourly chart or something like that, what happened here? And hopefully you see a push to new highs, big ass divergence, big ass divergence, big ass divergence. Willie stupid. Oh, big ass divergence in the buying volume. Oh man. And then of course the sellers came out in size here. So, if you're a bull, we have a simple rule. You gotta wait for this to clean itself up, which it seems to be doing, which is good, before you can be bullish. But man, we got a lot of work to do, and we got to go take this level out up top. So all you guys go out there and just go bust out through this top. If not, and if we go and just put in a big honking M up here, that actually initiates a new down move. Ugh, yuck. Be careful here, everyone. We don't want to see something like that, and especially you don't want to see that. Would be horrible. So come on, you bull. Step up in there. Go take this huge resistance level up top out. Didn't like how they failed right there. That was a little concerning. That is interesting, though. Daniele did say, and I gotta kind of agree with him, that maybe Bitcoin isn't the place where we really want to focus our attention right now. There's a lot of these little ones that I think just look so cute. They're so adorable. This was this versus Bitcoin itself. But versus dollar, like, gee whiz, that's starting to look really attractive down at the bottom end of his range there. So actually, I went and threw in a nibble bid down against those lows. I think I've shown you, there are like little names like that sis that I think look very viable down here for a cute little trade. So I don't know whether it's really like, I think that this is a new bear. I actually think, especially when we saw that huge double bottom in RSI on Bitcoin itself, then I think I've also, this chart's a mess. And my apologies, some of you hate the fact that my charts are so messy, but darn. So messy. And actually, I had a better chart up somewhere else, but we'll just use this. Okay. So what I think's going to happen here is we're going to get that push up into that trend line, and that's awesome. But the problem here is, like I said, mountain has not been validated. Could we have like a one day we go up and then right, and then the bull div is in RSI. So maybe RSI, all it does is it checks the 50 line through that. And then we go and put in the bottom, and that takes us higher. I could very easily see that scenario. So what I'm just simply saying is, ironically enough, our rule is, okay, bull divs confirmed. Now you got to show me a W. And I can't even really take a trade at this level. This is a horrible level to consider taking a trade at. If anything, what I want, bare minimum, is I want things like reload zones. So I'm going to be like, okay, so can I get like a nice pullback? RSI's gone nuts here. So can I get that pullback? Can I get it to come into reload zones and maybe even create like a bull div or something where price goes lower and lows, but the RSI maybe does something like this? I don't know, something like that. So this div here is actually that on that. It's not a clone. Move that over a bit. There we go, something like that. All right. So could I get that kind of div down in this? That would be like ideal trade for me, right? But a girl can dream. What I really don't want to see though is I don't want to see this thing go because we did not take that eye out. I don't want to see it go and put in a big old honking M and crap out. That would mean that we still got much further to go to the downside. So it was encouraging, the corn coming out of the gate here. Short covering. Maybe this is a function of Fed illiquidity. Ahead of the Fed, people are like, okay, I'm just going to take all my positions off and just wait for the Fed. Could be. One thing I don't like is the fact that it is rallying into the Fed, whereas everything else is actually selling off into the Fed. Because usually they say, buy the rumor, sell the news. So it could be sell the rumor, buy the news. We're not really going to know, of course, until a full hour following the Fed announcement tomorrow. So let's sort of reserve major judgment until that event. But like I said, I actually prefer to see this stuff weak into the Fed event. And if anything, corn and stuff, you calm down. Carve that inside bar, just calm down here, right? And then, after the Fed, go blasting higher and take out these highs. Okay, that's cool. I don't think there's anything to do here right now. So just cool your jets until the Fed's done. And if anything, putting on new positions right here, extremely dangerous. What we'd really like to see as we're coming up into trendline resistance here is what we really want to see is a big old fat W on the other side of all these trend lines. That will be a buy signal for me. Getting close, it's nice to see we got this div. The only problem is I just did not like this trade location. Something just doesn't smell right about this. So, all right, I don't know whether that helped at all. It is a pre-Fed day, so a lot of blah, blah, blah. Probably more rant than value, but nonetheless, hope you got something usable out of all that. As I said earlier, great presentation from Daniele today. So maybe consider the 30-day trial at the very least and come in and listen to a great conversation Daniele had with the community today in the Daily Brief. All right, going to leave it at that. Have yourselves a great afternoon, evening, wherever you are in the world. All the best. And the only thing left for Brian to say is bye for now.